All right, let's get right to it. If you've ever stared at your trading charts and just felt completely lost, like you're staring at a foreign language, then you're in exactly the right place. Today, we're going to strip everything back. We're going to transform how you see the market so you can stop guessing and start executing like a pro. Let's just be real for a second. This is probably why you're struggling. It's not because you haven't found the right secret indicator. You're losing money because your screen is an absolute mess. It's a war zone. You've got lines and indicators all over the place, and it's just pure, unfiltered confusion. And it's costing you. But the good news is we are going to fix that. Right here, right now. Think of this as your guide to cleaning up the chaos. By the time we're done, you'll have a simple, repeatable process that lets you trade systematically without all the emotion and second guessing. You're going to trade it like a machine. So first things first, let's properly diagnose the problem. That war zone on your screen, it isn't just ugly to look at, it directly leads to a cluttered mind. And you know what a cluttered mind leads to? Terrible, emotional, disastrous trading decisions. I mean, does this sound familiar? You've got 3 different moving averages, an RSI, a MACD, all of them screaming different signals at you. There's no sense of the market structure, no obvious direction, it's just noise. And this causes you to freeze up, right? Until you panic and jump into a trade with zero hesitation, usually at the exact worst moment. So, how do we actually fix this? Well, the very first step is the most critical one. And listen to me, it is absolutely non-negotiable. We have to create a clean slate. This is the foundation that everything else we're about to build will stand on. And here's exactly how you do it. Step 1, get rid of every single indicator. And I'm serious. RSI, MACD, all of them. Turn them off, delete them. Step 2, remove all your old drawings. Just start fresh. What you'll have left is a naked chart. And that's all you need. Just the candles, just the price. This is where clarity begins. So why are we so ruthless about this? Because indicators are lagging. They're inefficient. They're just showing you what already happened. They clutter up your brain, and most importantly, they pull your focus away from the only 3 things that actually matter: price action, market structure, and liquidity. If you master these 3, you won't need anything else, period. Okay, now that we've got our clean slate, we can actually start building a proper framework. We don't start by hunting for entries. No. We start by understanding the big picture, the main story the market is telling us. And for that, we look at the 4-hour time frame. Now, before we go any further, we need to be on the same page with a key term you're going to hear a lot: break of structure, or just BOS. All this means is the point where price pushes past a previous high in an uptrend or a previous low in a downtrend. It's just a confirmation that the trend is likely to continue. It's fundamental stuff. So here's your playbook for the 4-hour chart. It's a simple 4-step process. First, you find the most recent break of structure. Second, you mark the point that caused that break. That's your strong high or low, and it defines your big trading range. Third, you map out the fresh zones inside that range. And finally, you identify where the obvious liquidity pools are. That's it. This simple markup gives you your bias. And look, the mindset here is everything. You have to get this in your head. We are not trying to be fortune tellers. We're not predicting anything. We are simply reacting to and reading the story that the market is already laying out for us. We're just mapping the facts. Okay, so we've got our bird's eye view, right? Our big picture story from the 4-hour chart. Now it's time to zoom in to get a little more granular. We drop down to the 15-minute time frame to really refine our area of focus and start pinpointing where we might want to get involved. Think of it like this. The 4-hour time frame gives you the world map. It tells you the general direction of your journey. But the 15-minute chart, that's the detailed street map of the specific city you're interested in. We're going from a wide, general bias to a very specific actionable zone. And that actionable zone has a name. We call it a point of interest, or POI. It's just a term for a specific spot on the chart, like a supply or demand zone, where we expect something to happen. Now, this isn't an entry signal. It's just the location where we're going to start paying very close attention. So on your 15-minute chart, you map the smaller internal structure. You find the current little trading range inside your big 4-hour one. You mark the best-looking POI, usually the one at the very top or bottom. You check for any nearby liquidity that makes it an even tastier spot. And then you do the hardest part for most traders. You set an alert, and you walk away. And this right here, This is the secret sauce. This is what separates the pros from the people who just keep blowing up accounts. See, amateurs are always looking for action because they're bored. Professionals understand that 99% of trading is just waiting. It is boring. You do your homework, set your traps, and you patiently wait for the market to come to you. So you've waited, maybe for hours, maybe even for days. And then, ding! The alert goes off. Price has finally reached your zone. Now the action starts. This is the final stage, execution. We drop down to our lowest time frame, the 5-minute, to hunt for our entry with surgical precision. Now let me be crystal clear about this. You are not staring at the 5-minute chart all day long. That's a recipe for disaster. You only, and I mean only, go to this time frame after prices hit your high probability POI from the 15-minute chart. It's the last step in the process, not the first. Now, once you're there, you basically have two ways to get in. There's the conservative entry, where you wait for the market to actually show its hand and break structure on the 5-minute charts. It gives you more confirmation, but sometimes you miss the trade. Then there's the aggressive entry, where you get in right after a big sweep of liquidity. It's less confirmation, but you often get a much better price. And for that aggressive model, this is what you're looking for, a liquidation candle. This is that one specific, often nasty-looking candle that just stabs above a high or below a low, grabbing all the stop losses sitting there, and then violently reverses. When you see that happen right at your POI, that's your trigger. Look, this entire process, from the 4-hour all the way down to the 5-minute, it's all designed to get you to one place, the mindset of a machine. Before you ever click that buy or sell button, the plan is already made. You know your exact entry, you know where your stop is going, and you know where you're taking profit. There's no hope, there's no fear, there's no guessing. The system just takes over. And you might be wondering, okay, does all this waiting and all this process actually pay off? Well, the source material breaks down one single trade, taken using this exact mechanical system. The result of that one trade, executed flawlessly without emotion, a profit of $36,000. That is the power of a clear process. That right there is the bottom line. Consistently profitable traders don't have a crystal ball. They have a system. They have a process. They build their plan, they wait patiently for their setup, and they execute without hesitation when it shows up. That discipline is the entire difference. So let's end with this, because this is the whole thing in a nutshell. This isn't really about lines on a chart. It's about psychology. If your charts are clean, your mind is clear. When your mind is clear, your decisions are clear. And when your decisions are based on a system, your execution becomes automatic.